The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening and welcome to tonight's presentation on investing or trading. Tonight we have Sean van der Berg, who's from PSG Online at the JSE this evening, and he's going to be presenting on trading or investing. The presentation should take about 30 minutes, but however, Sean has got a lot to say, so he might run over a little bit of time, and if you cannot stay on a little while, this will be recorded, and you can go ahead and watch it online again at a later stage. Before we start, I'd like to just do a poll quickly with you and ask you a question. If you could just tell us how many of you have got a trading or investing account. If you could just indicate by pushing yes or no, so that we can just see how many of you are actually trading or investing. I see most of you have answered. Yeah, if you can just answer that question, and then we can take it from here. Great, so we've got a good indication. So I'm going to close that over here. So I'm going to hand over to Sean. If you guys, we're going to keep off the actual camera. We're not going to keep it on the whole time. I know that it also uses a lot of bandwidth. So I'm going to switch off the camera, but at least you you have seen us, and we will then get started. At the end, you're welcome during the presentation to ask us questions. We won't be able to answer them until the end. At the end, we'll read them out and actually speak and answer all the questions that you might have for us. So over to you, Sean.
Well, good evening, everybody. As Rolf introduced myself, I'm from PSG Online. I head up client education. I've been in PSG Online going on 14 years now. Been involved in the stock market since 1988. Been trading for myself and as well as investing. And over the last 15 or so years, I've been investing for my family. But here's our topic for today, our agenda. We can discuss, obviously, investing and trading, and then just separate the two of them, just to go into more detail. And just to elaborate some of the tools you would need to be a success as a trader or investor. To get started, I think, why did I choose this topic when this first came up? And I think over my 14 years of PSG Online, I found that most people do not know what they want. And I think if you had a look at it, here's a quote from Steve Jobs, and I think this will be my objective with tonight's presentation. People don't know what they want until you show it to them. Okay. So when I say they don't know what they want, these people come to me and they say, Sean, yes, I want to get involved in the market. And I say, what do you want to do in the market? They say in a very generic way, say, I want to make money. So they're not sure whether they're investors or traders. So in other words, they do not have a strategy. So it's very important to know which one will meet your goals, your financial objectives. And that's what we're going to try and answer tonight. The initial act of buying shares, doesn't matter if you're investing or trader, it's the same, doesn't matter, as I say, which path you go. But saying that, there are two very different methods. Ultimately, you're in the market to profit from the financial markets through participation. You can be on the sideline, obviously not an investor or trader. It's once you're involved in the market as a participant, and from there, your activities and how you do that will dictate are you an investor or trader. Investors, in a very short sentence, will seek larger returns over a longer period of time. This strategy would be a buy and hold investor, or buy and hold strategy rather. Traders, on the other hand, will take advantage of rising and falling markets. So the idea is that they'll enter and exit positions, but over a shorter time frame, and we'll talk about those time frames a bit later. But with the idea of taking smaller, more frequent profits. So that is, if you had in a nutshell, look at very quickly the differences between an investor and a trader. But there are some common misconceptions. A lot of people say that trading and investing is the same thing. No, it's not. They're definitely different. And a lot of people use those terms together. And I want to try and separate the two of them. The idea is that you need to understand the differences, the fundamental differences, and then choose which one's right for you. Are you an investor or trader? Because the idea is like having different hats on. You know, one day I've got my trading hat on, next day I've got my investment hat on. So the idea, the psychology behind it is also slightly different. So ultimately, it's what you want to do with the money invested in the market. What is your objective? Okay. So when we talk about investing, the idea is long term. And we'll come back to it again in more detail just now. But the idea is that the money you're putting aside is mainly used either for retirement purposes, or you're going to go for a nice long holiday overseas, or it is for your children's education. The idea is that you're not going to cash it in any point soon, and ideally it's more than a year's time. So you're not going to consider liquidating those shares into cash within a year. But obviously there's another criteria I'll bring in a bit later. We say long-term investing is 3 years plus, and you'll see just now why. Trading, on the other hand, is more short-term, and this is where we use the term we play the stock market. So yes, I might say, yeah, a bit more loose compared to investing, which sounds more serious. But when you look at investing or trading on the market, it's more shorter term. So the idea is that you get a cash in between one day and say 6 months. But it's not for your nest egg or your holiday fund or your education fund. Okay, so it's more liquid. I always say this is the fun money. This is the money when you say play, I also tie it loosely to the fun part. Yes, it's nice to have some trading accounts for fun, but obviously the serious money, I believe, is more on the investing side. Okay, and you'll see just now why I explained that. How do I choose between being an investor or trader? It comes down to one thing. How much time do you intend spending doing the research? How many hours do you want to devote to looking at technical analysis, the charts and the graphs? That's on the one side of the coin. How many hours do you want to spend perusing through financial statements? In other words, a fundamental analysis. Because that will dictate the difference between investing and a trader. So if you're only prepared to spend a small amount of time and you want to do it once, then you are much better off being a long-term investor. So I know there's a bit of a paradox. People always say that a long-term investor, you need a lot more time. No, as a trader, you need much more time. Okay. So if you're prepared to get your hands dirty and devote lots more energy and hours doing research, then you're ready to play or trade the market. In other words, the way to look at trading, you can treat it, first of all, as a part-time job or even as a full-time job. So it's not just something as a hobby. Trading is a serious business. Okay. So let's get into each one individually in more detail. What is investing? What is the goal of investing? Obviously, you might say, oh, it's common sense to say, yes, my goal is to build wealth. But no, that is we spoke just now about making money, but now it's making more concrete and say, I want to build wealth. How do I do that? I do it over an extended period of time, from a few years to decades. Okay. The strategy you use is a buy and hold strategy. And we'll talk about different strategies just now in more detail. But the idea is that my goal is to build a portfolio of financial assets. And obviously tonight we're talking about the share market, so we're talking about shares. And obviously if you look at asset allocation, there's bonds, there's property, there's businesses and things like that. But in tonight's talk, we're talking about a portfolio of shares with the idea that according to our risk tolerance and our investment objectives or our financial goals, we're going to structure a portfolio around that. What do we use to structure a portfolio? You can be a passive investor. In other words, you want to build up a portfolio of just unit trust funds. There are people that do that. You can also be a bit more semi-passive and build up a basket of what I call exchange-traded products. That's the ETNs and the ETFs, and then blend a whole group of these ETPs together as an investment portfolio. But obviously, we're going to talk about tonight is more shares. So that's why we talk about active investment. I'm talking about the DIY approach, do it yourself. And again, one step further, those of you more advanced investors, is just diversifying your portfolio and going offshore, but still involved with shares. So you want to diversify your portfolio geographically, obviously political risk, all those kind of factors you want to take into consideration, but also taking advantage of offshore opportunities. But ultimately, your goal is also risk management by looking at the quality of shares in your portfolio and also the spreading the risk between the different sectors and obviously different shares. That's how we're going to manage the risk as an investor. But ultimately, how do we make our profits? Through the magic of compounding. The share market goes up and down, and obviously the idea is to reinvest our profits if we're selling the shares, as well as our dividends, as well as any additional shares that we might get. And I'll use example a bit later of Apple. Apple just had a share split. Okay. What is investing? As we mentioned just now, it's for the long term. Okay. Your goal as an investor is to try to achieve at least between 10 and 15% annual capital return. My goal is such, I always look at 50% with the 3-year view. So that's looking at about a 50% return every 3 years. And obviously, it's a portfolio of shares. So there's some shares that might do better, some would do worse. It's the average of your portfolio. You want to take advantage of certain benefits along the way. So if you've got some property shares in your portfolio, you might be getting interest. Yes, they pay out in the form of dividends, but ultimately it is interest. You also want to get perks like dividends. And there we're talking about between 3 and 5% dividend yield. And I mentioned just now about the share splits. Apple had at the beginning of this month a 7-for-1 share split. The shares were trading at $790. If you had $100 shares, your portfolio just in Apple was $49,000. That is 7-for-1 split, made it more affordable for the man on the street. We went from $490 to $70. And since then, the share price has gone, this is when I looked at the price today, has gone up to $92 a share. That is a 31.43% increase since the 9th of June. Okay, very short period of time. So that's the advantage also of being a long-term investor. You take advantage of your share splits, more people can get involved, creates more demand, pushes the share price up higher. So those are some of the perks also along the way. But saying on the upside, there's also the downside. Okay, there's risks involved. Markets move up and down, they fluctuate. And as an investor, we talk about riding out the downtrends. And hence again, I want to highlight the importance of sticking to good quality stocks. We're talking about blue chip shares. Companies have been around for a long time, good consistent management, results and things like that. But there will be times where those shares will fall. Okay, so you'll wait out the less profitable positions with the expectation that the market will rebound. Okay, the market will bounce back. So any losses along the way will be recovered. That's your thinking, your mindset as such. But again, as I say, we're talking about the quality of the stocks, but also if you've got a well-diversified portfolio, you've got some financial shares, some industrial shares, and some resource stocks, you'll have a balanced portfolio. That also helps mitigate the losses on the market. Investors are typically more concerned about market fundamentals. Okay, we talk about reading financial statements. Obviously, the 3 statements I refer to them as balance sheet, income statement, and the cash flow statement. And from that, you'll get a lot of financial ratios. There's more than 20 financial ratios that help you determine, first of all, is this a company that's going to grow? And also, what's also more importantly, what's the health of the company? But as an investor, you also look at things like management forecasts, also to point to growth prospects. This gives you that confidence factor. Yeah. There are 4 investment strategies, and most of us have heard of Warren Buffett. He's a value investor. Basically, value investing is looking for shares trading less than the intrinsic or the true value. So we talk about Warren Buffett being a bargain hunter. So at PSG, our research is very much skewed towards value investing. But we also have what we call a growth investing, certain criteria. This is where you scan the market, but looking for good growth potential, companies that have earnings that are greater than the industry, or above the average of the industry, or the overall market. That's what we call a growth investment. At PSG, we prefer to use what we call GARP, growth at a reasonable price. So we combine the two together, growth and value investing, but also looking for companies that companies with consistent earnings growth, but excluding companies with very high valuations. So that's we tie the two together. Value investing, as I say, was created by a guy called Benjamin Graham. He was a professor at Columbia University, and his most well-known student was Warren Buffett. So Warren Buffett made it more famous. We're talking about growth at a reasonable price. A guy called Peter Lynch, who was a fund manager for many, many years at Magellan, and he was very, very successful using this kind of approach. And then more recently, we started talking about momentum investing. Some people say it's momentum investing. I call it position trading. But basically aiming to capitalize on the continuance of existing trends. large increases in share prices that are expected to give more gains. And you can talk about the hot stocks in the market. I remember at one point in time, Naspers was the hot stock in the market. But whatever happened with Tencent in Hong Kong, share price went up 5%, Naspers went up 10%. Okay, so that was a hot stock at that point in time. More recently, obviously, the rain edge stocks, the industrial rain edge stocks like SAB Miller, which made a new high last Friday, Richemont, British American Tobacco, those are the ones that been pushing our market up higher and higher because of the rain weakness. So there's a saying in the market, new highs go on making new highs. And this is what we call momentum investing. So some people would focus just on those kind of stocks. Okay. That gives you some of the investment strategies. I like to have a blend of that in my portfolio to take advantage of all opportunities. Okay. I want to just show you the advantage of being a long-term buy and hold investor. Here's Sasol going right back to 1985. So let's have an example. Way back in 1985, the share price on the 27th of March was trading at R5.60. In the share market, we really talk about cents. And let's have you invested 10,000 Rand. You would have bought 1,785 shares at R5.60. Friday last week, the share price was closed at 618 Rand in 50 cents. So your 10,000 Rand has just become over R1 million. That's excluding any shares, scrip dividends, where we talk about cap shares or bonus shares. Okay, that's not a bad return. In other words, 10,944% over the last 29 years. So this is the kind of share you want to have in your portfolio. Okay, now that's just looking at the capital growth, buying and holding. Then I'm going to show you another thing on the other side of the coin. Look at the dividends. And this is just showing you the last 10 years. Remember, we had it for 29 years. The last 10 years, you would have got over 114 Rand per share if you had to sum it all up. Times your 1,785 shares, over 203,000 Rand in dividends. Just the last 10 years. Imagine over 29 years how much you would have had. Remember, they've only introduced a dividend withholding tax about 3-4 years ago. Before that, dividends were tax-free. So this is another perk by being a long-term investor. So you've got a dividend income and a growth in that dividend. Okay. So I hope you, those of you that are still confused if you're an investor or trader, I hope I'm pointing you in the right direction. Okay. So just quickly, advantages and disadvantages. Okay. Obviously, equity price, the share price will go up higher than inflation, although inflation will be higher than the bank rate. Ultimately, the rate of growth will beat any return you get in the bank. So yes, you've got that capital appreciation, which is determined by supply and demand. If you want to get a good company with good growth prospects, there will be demand, and the share price will go up. And we just highlighted for you now the magic of dividends. And that's reinvesting of dividends, and that's where also the magic of compounding comes in. Sometimes you also get bonus or cap shares. That's where you get free shares instead of cash, and that's another way of just compounding your potential profits you're getting. And some people don't look at this, but I look at it. If you have a share, if you have a property, people know what your property is worth. They can look at your neighbors and look at the area. If you've got a share portfolio, you can actually hide it from the public. People don't know what you're worth. Okay, so a lot of people don't see it as an advantage. I see it as a big advantage. On the disadvantage side, obviously there are potential for losses and suspension. What tools do you need? This is where I say do it yourself investor instead of going through a portfolio manager. You obviously need a computer, a trading platform, you need internet access. But also, if you want to do it yourself, very important, I always believe that your first investment in the market is always in your education. So online tutorials, online videos, online webinars like we're having here. And we have various meetings and newsletters and that. These are just tools to help you make a more informed decision. Okay, let's talk about investing. Talk about trading before heading to some questions. Trading on the other side obviously involves more buying and selling. So we can still use shares, you can use exchange traded products, but now we start bringing in more derivatives, equity single stock futures, contracts for difference, your index futures and currency futures. Because the main advantage now, when talking about more frequent buying and selling, first of all, you got leverage. It's more capital efficient, and also it is cheaper buying derivative products than the equity products. But I know most of you might still be novices. I suggest before you can consider getting involved with derivatives, understand how a share moves up and down and trade shares first. Okay. So the goal is to generate returns that outperform a buy and hold strategy. So those of you that are investors already, you want to add on a trading account. So this is where, as I say, the fund money, You want to try and achieve at least 10% return per month. And with gearing and with the lower costs, it is quite achievable, but much more time. So the goal with trading is you're going to buy at a low price and sell at a higher price. So you buy something at 5 Rand, sell it at 10 Rand in a rising market. With derivatives, not with equities, you can sell at a higher price and buy at a lower price. I can sell at 10 Rand, buy it back at 5 Rand and still profit from the falling market. Okay. Remember, with equities, you can't do that. So the idea is that we're making profits and losses in a very short period of time, but very, very important when it comes to trading to manage your losses. So many of us traders who use protective stops automatically close out any losing positions. That is usually at a predetermined level. When it comes to trading, as opposed to fundamental to investing and fundamental analysis, with traders we use technical analysis. These are tools to help us bend the odds in our favor, but also to highlight high probability setups. So here's on the next slide. You see here's a graph of S&P Miller, and I'm using a bit of hindsight. Yeah, back in October last year, there was this little breakout, and there was this gap up. Yes, it was trading below its moving averages, so it would be more ideal for an aggressive trader, someone going for high returns at higher risk. But let's say, for example, the point I'm trying to get across is the importance of risk management. So yes, we would have bought that. Let's bring my little cursor here quickly. Yeah, that second point there. That's where I would have got in. So my entry price would have been 480 Rand 30 cents. My target price would have been the previous high. Okay, if I draw a line across here, and my stop would have been just at the bottom here. So that's the three numbers you first need to know as such. Let me just get rid of my cursor again. Sorry, I clicked on the wrong one. Okay, so my potential reward is, in this situation, 38 Rand 70. My potential risk is 10 Rand 30. So it's important to always calculate your risk-reward ratio. I'm willing to risk 1 Rand to make 3 Rand 76. That's what this trade was telling me. So that helps you look at the stop loss. Other side of the coin is what you call position sizing. Now, when it comes to starting capital, I always look at 100,000 plus. I know some of you might have much less than that. Just understand that you have less flexibility, less funds. But let's say we're working on 100,000 Rand. You should be working on about a 2% risk factor for each trade. So 2% of 100,000 is 2,000 Rand. In this situation, I'm going to divide my potential risk per trade by my stop loss. Remember, it was 10 Rand 30 to give me what they call position sizing. In this situation, 194 shares or 2 single stock futures contracts. So this is another way of managing risk. So ultimately, with this trade, with the gearing, I would have made 53.72%. 5,707 Rand profit divided by my margin, 50% margin in this situation. So this is what makes trading attractive for most people, that kind of gearing and things like that. But let's get back to normal equities. There are 4 different trading styles, and trading styles mainly refers to your time frame or your holding period. So we're talking about a position trader. Someone's going to hold a position, be it in equities or be it in derivatives, especially something like single stock futures, from months to years. So obviously single stock futures up to 3 months, but for equities you can hold it forever. But you're trading more the cycles. So that would be called a position trader. You're not buying and holding, you're trading more the cycles. Buy the low, sell at top, reinvest. Swing trader holds a position from a few days to a few weeks. A day trader would hold a position intraday only. He's just can't hold a position overnight. Okay. So there are various factors also involved with your trading style, the account size, the risk capital. So I use the word risk capital. This must be forever savings or forever. You must understand there's risk involved. You can start with a little of 1,000 Rand, consider the costs involved. At PSG Online, our minimum cost is 98 Rand a trade. So with 10,000 Rand, your cost, your share has to move up 1% to break even. So obviously, the more you trade, the cheaper it becomes. Yeah. Now the time, that's the most important thing. It's not about how much money you're starting with, it's how much time you've got dedicated to trading. And also important is your level of trading, your level of trading experience. Yeah. If you're first a novice, I suggest stay away from the trading side. Learn to become an investor first. Take it more leisurely. I believe you learn to crawl before you walk, before you run. Also important, a very important factor is your personality. If you're more of a cowboy, you'll take more risks. So beware of those kind of things. And also ultimately your risk tolerance. If you're putting your money into a trading account and you even start trading it and you can't sleep at night because you're worried about the money, maybe the stock market is not for you. So those are the kind of things I always say, you'd rather put your money in the post office. So let's quickly go to advantages and disadvantages. Buying and selling as a trader, you have the potential to make huge profits. We discussed that already. Especially derivatives, you get an extra gearing. Accessibility, you get a wide range of shares to trade from. And obviously the big advantage is liquidity. I can move easy into cash. Other traders can take it away from me, can buy it from me. So that makes it a very attractive vehicle for many traders. But on the disadvantage side, trading, if you've got small amounts of funds in a trading account, you must understand you'll have high brokerage costs. Take that in consideration. Yes, there are risks involved, and we've spoken about already how to mitigate that using stop loss, position sizing, and things like that. So again, do your homework on the shares and things like that. Obviously, with derivatives, there's additional risk involved called margin calls. You can not only lose your initial margin, you can lose much more than that. So risk management, very, very important. Okay, so what tools do you need? Very similar to investor. Obviously, what's more important now is alerts, that kind of stuff. You need charting software. We have our own software, and there are a lot of other packages out there. Again, there's a lot of education available for you guys, and it's for free. Okay, trading newsletters, trading forums, and things like that. All go to our website. Okay, so I've run out of time, so just quickly to summarize, and I think this is the easiest way to summarize it, compare the two of them. Understand as an investor, as passive management, and this is what I was talking about just now. The difference between investing in a trader is your time horizon, not only the amount of time involved, but your time horizon. I know there was a question that came through just now about the 3-year rule. The idea that we use anything more than 3 years. You buy and hold a share, and you hold it for at least 3 years, and decide after 3 years to decide to sell that share, then capital gains tax applies after 3 years. Okay, that's why I use that number. Anything with less than 3 years, obviously income tax applies. So the idea of investor buy and hold strategy, building a good quality portfolio of undervalued shares. I mentioned just now, balanced portfolio, financials, industrials, resource stocks. You're concentrating more on the fundamental analysis. My goal is still capital growth as well as income from my dividends. You're going to use risk management in the form of quality, the structure of your portfolio, and the spread. Obviously, by buying and holding, my cost is much lower. And I mentioned just now the added advantage is capital gains tax is much less than income tax. Other side of the coin, a trader is an active management. You're involved in watching on a daily basis. And this is anything less than 3 years. We spoke about the 3 different styles. You're using more of the charts, technical analysis. Yes, your goal is still capital growth, but you're using more stop loss facilities, more protection stops. If you're buying and selling, understand there's more costs involved. So you must put that into your equation. And ultimately, also, any profit you make is deemed income. So obviously, you have to add that into your income tax at the end of the year. So to separate the two of them, I always suggest to people have 2 portfolios. Have a capital portfolio and have an income portfolio. And at PSG Online, we're allowed to have more than one account. One login, one platform, 2 accounts. Okay. So you only pay the admin fee once. Yeah, that's the main thing, and it's easier just to declare to the receiver, this is capital, this is income. Remember, you can't be taxed if you haven't sold anything. Okay, so in conclusion, people, time to research is your most important resource. Obviously, risk tolerance is also very important, and your financial objectives. So starting capital, yes, people might say is important, but more of the time. Okay, you can start a little bit and then build up from there. But also, obviously, your knowledge and skill, that's your also investment if you're starting out as a novice. So the question is, investor or trader? Our recommendation is to be both. Okay. So you should be getting a link to this presentation emailed to you soon, as well as a recording if you're on this presentation. So from my side, I'd like to say thank you. Any questions, you can also send us on our Facebook and our Twitter pages. And then when you get this presentation, you'll see there'll be additional webinars coming up and things like that. So let's handle any questions you guys might have.
Okay, great, Sean. If we just go to the questions and look for those that have typed in some of the questions. The first question is, how strict is the 3-year trading investing rule applied? And you've already spoken about the actual 3-year trading rule there. The next question is, how does PSG relate to TTM? I'm not sure what they're talking about there. Have you?
No. This is one of those educational classes. There's no relationship whatsoever.
Okay. I'm having a trading account, but I don't know what to do to start trading. What would you answer to that, Sean?
I suggest the first step is to create a watch list of potential winners, and there's various ways of creating a watch list. You can use fundamental analysis, technical analysis, a top-down approach. But you can go into my website, there's a whole tutorial just on that subject, how to get started. And I suggest before you start trading with real money, simulate the market. I know the JCU has a very powerful simulator, so do we at PSG Online. But create a watch list, and then from there gain the fundamental information and the technical information, and that'll help you make a more informed decision. Thanks for the question, Benny.
And then there's a question here.
Sorry, that was from Dina.
There's a question, is trading more profitable than investing in the end? On average, if correctly or minus the cost, is trading more profitable than investing?
Good question. Well, Warren Buffett is the most famous investor. He's a multi-billionaire, and I know there's a lot of other very successful investors, be it Peter Lynch, be it Sir John Templeton, and there are a lot more famous investors. When it comes to traders, yes, we've heard of the guys, the turtle traders in New York, and there are a lot of others. You know, you can get a book called Market Wizards, where Jack Schaffer interviewed all these top traders. But to answer your question, I believe you've got a much better chance of being an investor, because it's not so much timing the market, it's time in the market that will give you the success. But to answer the question again, also, rather have two accounts. Have the trading account for the fun part. But I believe that most of your funds should be more in investing. Thanks for the question, Benny.
Okay, there's another question here. I need to know, when you say investors content with about 10% to 15%, who carries the risk of this investment? I'm not sure what...
returns. Our goal is 10 to 15%.
Okay.
Returns, or are you talking more of the margin? But I think it'd be more, our goal is to make 10 to 15% returns per annum. I think that's the question answered there.
Okay, there's another question from Moni saying, how can I know which share to buy?
Yeah, a good question, Monde. Yeah, so that will come back to fundamental analysis, technical analysis. You'll have certain criteria. You're going to look for shares that are undervalued based on certain criteria, like a PE ratio or PEG ratio or price NAV. You're looking for companies that are profitable. You can use various profitability ratios, like return on equity. And also you're looking for companies that have a manageable risk. We use what we call interest cover. That's just on the one side of the equation, the fundamental analysis. The other side of the question, you're looking for shares that are in a bullish trend, might be at the bottom of a cycle, you could say it's oversold. We're also looking for shares that are outperforming the market. So those are certain ways of choosing your first shares.
And we will be covering that topic on other webinars coming forward. There's another question here. Does PSG provide trading strategies to clients?
Yes.
Okay. That's Sean.
Trading strategies. Yeah. Yes.
Okay. Does CGT and brokerage not have a huge impact on the profits when actively buying and selling?
Well, CGT will only apply to investing after 3 years. Obviously, income tax will have a big impact on trading, so that's very important that you plan your trades and trade the plan. But yes, brokerage is also very important. So those are things you have to take in consideration. I agree.
Is it possible to be involved in both trading and investing? You've answered that yes.
Yes. And I suggest open two separate accounts, separate the two different strategies.
How can one trade without using a stockbroker? There is no way, unfortunately, Monday. You need to go via one of the stockbrokers, so you can't go directly. What is the best online trading platform in South Africa? Well, Sean, you can maybe answer that via the ratings. Where did you guys?
Well, we've won the stockbroker of the year for 3 years in a row now. That's the Business Day Investor Monthly. 3 years in a row because of our trading platform, number one, and number two, because of research we offer. So I think that'll answer your question, Mario.
Yeah, so Mario, from a JSC's perspective, you need to go and obviously just go and practice and play with the different platforms and see what suits you at the end of the day.
Yeah, just that. open up a free trial account.
Yeah. Okay. Are there any online brokers? Okay. Stocks. Okay. Not sure. That is. Okay.
Hello, Gerard.
Another question here. Would using a simulated trading platform, I take it, be a better platform to learn on how to trade?
Yes, Stephen, to answer your question, obviously the advantage of the simulator is you gain practical experience how that platform would work by placing your orders, buying and selling, number one. Number two, the advantage there gives you the confidence in your stock picking abilities. The disadvantage is that there's no emotions involved. So I always say to people, treat it as if it was real money. If you make a mistake, don't just reset the simulator. So yeah, there are pros and cons, but the main idea is that you'll be able to gain practical experience how to place a trade. Okay, thanks for the question, Stephen.
Yes, another one. Is there a minimum amount that you get taxed on, or is it from the rand value?
From a capital gains point of view, if you make 100,000 rand capital gain, for example, or profit, the first 30,000 is exempt from tax. Thereafter, obviously, you've got a 70,000 rand gain. When it comes to trading, yeah, that's a different story. You have to add that profits at the end of your month, all that profits onto your income tax, and that might push into a higher tax bracket. So there's no minimum when it comes to trading. But again, that's why I suggest to have two separate accounts.
There's another question. How long to get to a level of 10% per month? I have started only now with CFDs.
Well, it depends on your starting capital, the amount of starting capital. The more funds you have, the more flexibility you have, the more positions you can have. It also comes back to doing your homework and getting those trade setups will give you that potential high probability trades. But yes, it is possible to make it 10% per month. The trick is doing it consistently.
There's another question here. Which books do you recommend for traders to invest in?
Marcus, I always believe Google's your best friend. You know, if you had to go to Investopedia, the website, for example, I find there's a lot of information there for free. Remember, on our website, PH Online website, there's a lot of online tutorials. The books I use is more technical analysis, and obviously technical analysis of the day helps the trader to make more informed decisions, and there are lots. I use a website called Traders Library, and that's where I get all my books. Market Wizards, I mentioned just now, there are two of them. That tells you more the thinking, the mindset of the traders. There are a lot of books on trading psychology.
Trading in the Zone.
Trading in the Zone, Mark, what's his name?
Douglas.
Mark Douglas, very good book. That's more psychology. Martin Pring, he's written quite a few books on momentum indicators. There are lots. I suggest go to Google.
Yeah, you can also look at. I've got 2 or 3 names here. Trading for a living, or coming to my trading room. That's
Dr. Alexander Elder.
That's right.
I recommend that. Yeah.
And then if you're looking South African, there's Richer Than Buffett.
Yeah. Eglo.
And Technical Analysis A to Z. I mean, there's so many books out there, but as Sean says, go and do a bit of Google search or the Trader Library. Let's go to the next question. What is your view on small caps stocks in a longer term portfolio, or should it be rather be for a trading portfolio?
Andre, good question. I like small cap stocks, provided you're looking for shares that are undervalued, profitable, no financial risk, especially with small cap stocks. Very important that they have cash flow, very important that interest cover is more than 5 times cover. And there have been a lot of examples where you could have picked up these stocks. Even in AltX, there was a company called One Logics. There was a company called Taste Holdings. All these companies were under the radar screen for many, many years. Okay, you could have bought them. You could have had them in a long-term portfolio. And then when they moved over to the main board, obviously we've seen how they blossomed from there. But yeah, I really believe having small caps in your portfolio, because those are the ones that give you the kicker in your portfolio.
Okay, another question. Where can we get trading strategies from PSG? That's from Benny.
Yeah, Benny, again, go through the tutorials. There's a lot of information through our tutorials. You can also email me and I can help you. So it depends on, again, all those factors I mentioned earlier. The trading capital, the time, your risk tolerance, all those kind of things. But trading strategies, trading styles, they all fit together very, very closely. Thanks, Benny, for the question.
Is there a place where I can go for a week or for intraday trading, for high-speed training or experience?
Not so much on our website. Yes, you can do intraday trading. We call it day trading. More the index futures, currency futures, but we don't offer specific training for that. But if you ever go Google it, I presume you'll find someone in South Africa.
Okay. Jan's got a question here. How and where can we learn more about how to become a day trader? That's just exactly the same as the previous question. There are a lot of courses online that you can learn day trading techniques, but again, you're going to be looking at charts, graphs, and technical analysis if you're going to be a day trader, and so you're going to have to obviously do a lot of reading with regards to that. There's another question here. Would position trading be a natural progression from investments?
Yeah, I'd say it's a stepping stone from being a long-term investor to being a active trader, or sorry, a passive trader would be position trading. Yeah, I agree with that.
There's a question here for you, Sean. What do you think of high-frequency trading?
I don't do it. I know there are a lot of Mario again. Thanks for the question. I know there's a lot of algorithms and a lot of the big institutions are using them a lot. I don't do it. You're scalping for small percentages. You have to be on the market, and it's usually some kind of robot that does that kind of stuff. For you to sit there and scalp the market is very time consuming, and nah.
Okay, and what would an investment in PSG of is it 100,000 be worth if shares were bought, say, 10 years ago?
Marcus, 10 years ago, I can't remember offhand what the share price would be, but you know, we can go look at historical price and just divide it into it, and that will calculate it. So I can't really answer your question, Marcus. 10 years ago, I presume it was roughly about 165. I think it's the lowest that traded. So divide that into 100,000, that will give you a number of shares you could have bought.
But it's a good, decent amount. I have seen an article with PSG itself. It's yeah, it was obviously a good buy 10 years ago. What is the minimum account balance?
There's no minimums, but just understand there are costs involved with trading. You can start with a low of 1,000 Rand. To have a trading account with PSG, there is a monthly fee of 40 Rand, so you need to have some cash in your account to cover that.
Okay, and what do you think of forex trading, Sean?
Okay, we don't do spot forex. We do currency futures. It's great. It's a great tool, Mario, for the day trader. You know, you're in and out of the market for a few, 100 pips at a time. It's great for the day trader. I just believe it's more for the advanced trader in the sense that you need to know not only technical analysis, you need to know more of the fundamentals, especially more economics, more political. You know, for example, Jacob Zuma's speech tonight. Everybody has expectations. What happens if those expectations not met? Tomorrow the rand can be hammered further. If you are on the wrong side of the market, those are things that are out of control. So I just believe it's a bit more risky. So more, credit risk, interest rate risk, all those other factors you have to have your finger on the pulse for. So it's not for everyone, but it's a great way to make money.
Okay, ladies and gents, thank you for attending. We've come to the end of our webinar. There's no further questions we can see here. You're welcome to email Sean at info@psg.co.za. Otherwise, myself, Ralph, you can email me at ralphs@jsc or clubs@jsc.co.za. Please feel free to hook up with any of our webinars going forward by looking at the website jsc.co.za/webinars. And I hope you've enjoyed this evening. Please do feel free, fill in the feedback form once this webinar is finished. We really appreciate any of your feedback. Thank you so much. Take care.
Bye-bye.
Thanks very much, Sean.
Thanks a lot for your participation, and all the best.